Hi everyone, Erwin here, and it's the day after the Canadian election. So naturally, like any real estate investor, I ask the question, what does Mark Carney's minority government mean to real estate investors? Because I'm one myself. So quickly, again, my name's Erwin. My team of realtors and I have done close to $500 million in transactions on income properties. What I'm most proud of is that we've helped about 45 people or more, hardworking Canadians, create more than $1 million of net worth for themselves and their families via investment properties. Currently I'm working with over 4 dozen Canadian clients to acquire income properties in the USA via Share. And I'm here to share my experience helping hardworking Canadians beam their Google Maps towards financial freedom. So here at my business, I Win Real Estate, our 10-year target is to help 200 investors reach $1 million or more increase in net worth. So far, we're over 45. But more recently, I added this. I want to help those people also develop a 6-figure cash flow, and we're able to do that because of my partners in the States via Share. Now, I take solace in that I think that Canadians voted for the Liberal Party and Mark Carney because of mainly Trump. And you can see what happened with the Trump 2.0 effect. You see, as Trump became president and he signed the executive order for tariffs on Canadian goods starting February 1st, and from then on, the polls were indicating that Canadians were believing that Mark Carney would be better off to negotiate against Trump for this pending trade war. And Mark Carney's resume is fantastic. There's pretty much no Canadian, I think, that can match his resume for dealing with the financial crisis. And again, I take solace in that's what I think happened, and it's not an endorsement of this, where home ownership in Canada has become out of reach for so many Canadians, especially young people, and especially the people who haven't even been born yet, right? We see in this graph, you can see Canada being the top line, that our incomes have not kept up with home prices. Even getting into it specifically, over the last 10 years, home prices increased 86% in Canada. Over the last 20 years, home prices were up 200%. Over 20 years, 20%. 200%. But disposable income over the last 20 years has only gone up 21%. Hence, we have this massive disparity. And you see the Americans, while affordability hasn't been great for them either, they've been a lot better than us Canadians. So Mark Carney and a Liberal Party of Canada minority. What to expect. So let's first look at Mark Carney's background. He's a central banker. He's a globalist, so he's pro-trade. He's also very pro-climate policy. He's a very green person in terms of green policy around the environment. But he's now leading a minority, meaning he needs other parties to help him pass legislation. So that means his old friends, the NDP, so it could mean we get more of the same, or the Bloc Québécois could block or demand changes to major housing tax or development plans. So then my immediate question is, if these are his partners, how do we build pipelines and mine for minerals in order to grow our economy? Which was, again, this is one of the election promises that was given by both the Liberals and the PC party in different ways. But then how do we actually get this passed? How do we get this legislation passed? I don't know. Investor lens, so expect slower policy changes. There'll be gridlock, uncertainty, and market hesitancy. Again, because the Liberals do not have a majority, they cannot just simply pass legislation, follow through on election promises. What else to expect? Hopefully no surprises like we had with the previous Trudeau government around more spending and tax. For example, just quick trip down memory lane, 2017 small business tax reforms on private corporations. So this was directed at folks like myself and my clients, real estate investors who are pretty successful in life. A lot of them have corporations. End of the day, it meant more tax for small business and investors. 2019 carbon tax, again, more tax. Yes, the consumer portion was canceled, but what is it going to be replaced with? Again, Mark Carney being pro-green policy, something's going to replace this. In 2020, the finance minister resigned, Bill Morneau. He resigned over disagreements with Justin Trudeau. Justin Trudeau wanted to spend more money versus Bill Morneau wanted to do something what he considered fiscally responsible. Justin Trudeau wanted to spend well and above that. They didn't agree, and along with their scandals with the We Charity as well. So Bill Morneau had to resign. 2024 capital gains tax increase. Again, this was canceled. It was supposed to be canceled. Mark Carney promised he would cancel it, but it was going to be more tax. Now remember at the time they were saying this is all about fairness, all about raising more money to support building more housing, support other Canadians who have less. So if it was so important, expect this to be replaced. Replaced by what, right? And remember, the finance minister, Christian Freeland, resigned partly over this, partly over other things. Again, we've seen a history of the prime minister not agreeing with the finance minister and the finance minister losing their employment. Rate cuts and recession. So the market is predicting, so this article just came about 2 days ago. Generally, the market predicts, including the banks, here's the banks, what their predictions are. Generally, they're predicting 2 more rate cuts in 2025. Scotiabank is saying they're going to stay flat right now, but if the economy gets worse, they do expect cuts as well this year. 40% of those surveyed expect a recession in the next 12 months. Now, we are already in a recession in terms of real GDP per capita. So inflation adjusted economy per person, we are already in a recession. Now they expect a technical recession based on gross economy, GDP, for the next 12 months. Bond yields, the 2, 5, and 10-year Canadian bond yields are expected to stay between 2.5% to 3%, which is kind of interesting because I put an asterisk next to 10 because the current 10-year bond rate is actually over 3%, so I'm not sure why this article says it's going to be below. And I've given my source in the notes there in case you want to look this up yourself. Recession. Now the Liberals' latest budget, so this is from the Carney government, they are forecasting increased spending to combat recession. It's expected that with the recession coming, it's expected that they would spend more money. And the current Liberal government plans to go further into deficit as a percentage of our economy, as a percentage of GDP. Now remember, recession means job losses, which for us real estate investors, that means lower rents, possibly lower real estate prices, and higher delinquency risk. Delinquency risk meaning people are not paying their bills, credit cards, mortgages, their rent, right? So make sure, so then the takeaway here for investors is make sure your portfolio is balanced for landlord-friendly strategies or locations. This is not the time to be investing in an area where potentially delinquent tenants you cannot remove them from your property, right? More than ever, do you need to be implementing landlord-friendly strategies or landlord-friendly strategies. Protect your cash flow. Trump trade war, Canada's headwinds. The Liberals proposed a $2 billion strategic response fund for manufacturing. They're wanting to waive EI waiting periods for tariff-impacted workers. This is very similar to COVID, so this is really positive for landlords in that this is very similar to COVID, so then those who lost their jobs or during COVID were able to get EI, employment insurance, and then pay their rent. So again, this is good news for landlords. But we're already seeing impacts on auto, lumber, and energy. And already in Ontario, we had 2 automotive and supply manufacturers implement layoffs of employees, and we're already seeing problems in some materials, including construction. Now, what that means to investors, EI absolutely key to tenants, and in turn they can pay their rents. Expect cost pressures on construction, retrofits, and home insurance. Now, this is important because as landlords, we all have home insurance. Well, actually, all homeowners have home insurance. You can expect inflation as the cost of materials goes up. That means our cost of insurance goes up. And for me, I'm in a rent-controlled province, Ontario. Many other people watching this will be as well, BC, Quebec. We can't exactly easily raise our rents. Now, be wary of delay risks in new builds and flips, if that's your investment style. This could drive more demand for turnkey and existing rentals, which is good news. Good news for most of us existing landlords. Liberal housing promises. Build Canada homes, 500,000 units per year. Apparently, our theoretical capacity in Canada is 400,000. So I wish our government and all Canadians all the best of luck that this actually happens, because again, it's for the greater good. $25 billion for prefab housing, $10 billion in low-cost builder financing. Again, all great news. Again, we still have our constraints to get these things actually done in Canada. We have a severe lack of skilled labor in the trades. GST eliminated for first-time home buyers under $1 million. Again, these numbers are all enormous, and What gets me is just how expensive housing is in Canada. Now, to give you context, here's a property that my partners and I at Share that we offer to our clients. This one, here's an example of a new construction house just outside Austin, Texas. This is a 3-bedroom, 2-bathroom house, brand new, right? For 1,420 square feet. You can buy it today. Anyone can buy it today. $245,600, right? That works out to $173 American per square foot, or in Canadian dollars, $242 per square foot. This property also rents for $1,795 per month plus utilities, right? Again, in my context, good luck finding anything new construction that gets this kind of rent to price ratio. And also, this is in the landlord-friendly state of Texas, and also the economic fundamentals of Texas. Texas is wonderful at attracting jobs. For example, this property, the same property, you see the red pin in the top right? That's the location of this property. See all that white, yellowish space in the middle? That is Samsung. Samsung is investing $65 billion to build 3 microchip fabrication plants. That will create, one's already done, so this is already happening. In total, they expect 5,000 permanent jobs. The median salary for these jobs is $96,000 US dollars. That is more, the median salary here is well more than double the Canadian household income. Increased rents, rental demand, and rising home prices for this area. Good investment? Possibly, right? For more information on US investing, go to my website, iwin.sharesfr.com. Again, continuing on with the liberal housing promises, halved development charges for multi-unit builds. Again, wonderful news. It's just, I do not see how we actually make housing affordable again in Canada. The prices are just so high. Incentives to convert existing buildings to rentals. Wonderful news. Unfortunately, the way it is today in Ontario, there's almost nobody wants to be a landlord. Investor tip, this is all great news for developers with scale. This will be a tougher time for us smaller investors, as we probably can't still afford this sort of stuff. And again, the opportunity still means to look to the US landlord-friendly states where yield still makes more sense, where positive cash flow is much more easy to find. Strategic takeaways, keep an eye on rates, interest rates, and bond yields. The window to refinance or go fixed is probably near. Avoid overexposure to renovation, heavy flips, and avoid tenant-friendly strategies. Focus on stable income properties. Only invest where it's landlord-friendly or landlord-friendly strategies such as student rentals, rent-to-own, commercial meaning retail, industrial, office. Those are the strategies in Canada where the landlord has all the rights. Watch for federal retrofit and conversion grants. I know family relatives of mine are looking at getting new windows for their home. So the Liberals do plan on having rebates for those who improve the energy efficiency of their homes. That's great news. Be ready for policy volatility. Policy volatility will also partly relate to trade war and Trump volatility. And also add to that, minority governments rarely last the full term. We may have another election in who knows how many years. I doubt 4. Me personally, no change here. My plan is still to continue to sell our local properties in Hamilton, Ontario, as our tenants give us notice, and then add to our U.S. portfolio for stable cash flow and long-term growth. All right, so don't forget, folks, while fear is high, I do believe the worst is past for the economy in general. The Americans are expected to release a tax stimulus plan and their energy and mining plans in order to reduce red tape, to improve their economy. So tariffs are bad. Never been a fan of them at all. But hopefully it only gets better from here. And in general, everything's cyclical. Those who lose the most money sell during the bottom of a cycle, and those who make the most money typically buy at the end of a cycle and wait for everything to just return back on the rise. Because at the end of the day, we're talking about both in Canada and the USA, a whole lot of spending, tax cuts, a whole lot of stimulus. So there's still lots of opportunity for everyone going forward. All right. So if you like that, please hit the like, hit the subscribe. If you have any comments, I'd love to hear what you think about this video. how you're changing your investing, or if you're staying the same, what you're buying, what you're selling. Love to hear what your feedbacks are in the comments. All right, till next time.